Welcome to today's deep dive. If you're looking to understand the future of um, global money movement, well, we have a fascinating case study for you today.
Yeah, we're unpacking a really interesting recent report from pvtIQ on FOMO Pay.
Right, so they're this Singapore headquartered startup.
Exactly, and they've basically transformed from a regional mobile payment aggregator into this massive bridge, like a bridge between traditional finance and the Web3 digital autonomy.
So to understand how they actually pull this off, we need to look at the financial mechanics. I mean, they have three core segments, right?
Yeah, three flagship pillars. So first, there's the retail merchant arm, FOMO Payment.
Okay, got it.
This is where they aggregate over 25 different digital payment methods, mobile wallets, tokens, into just one single system for merchants.
Right, which is great for retail.
Yeah.
But if that merchant needs to, say, move that money across borders to pay their suppliers.
That is exactly where the friction hits, and that's why they built their second pillar, FOMO iBiz.
The corporate treasury arm.
Right. It provides multi-currency virtual accounts specifically for B2B cross-border settlements.
Okay, but wait, hold on. I have to push back a little here.
Sure, go ahead.
You're talking about this like they're the only ones doing it. But this space is incredibly crowded. You've got well-capitalized unicorns like Airwallex, legacy giants like Stripe.
Oh, definitely. It's highly competitive.
So how does a startup like FOMO Pay protect its profit margins from just getting crushed by structural pricing pressures from those giants?
It's a great question. And honestly, they were facing that exact existential threat, which is why they engineered this massive strategic pivot.
Okay, what kind of pivot?
Well, they realized they just couldn't survive a low-margin retail war with a behemoth like Stripe, so they essentially abandoned that race to the bottom.
Wow, they just walked away.
Pretty much. They shifted their entire focus to capture the B2B cross-border payments market, which, by the way, is a staggering 34.8 trillion US dollar market globally.
That is a massive opportunity. And looking at the management profile, I mean, the founders, this pivot makes a lot of sense.
Yeah, founders Louis Liu and Zach Yang.
Right, because Lou has that background at Visa, so he clearly understands the underlying plumbing of global payment networks, right?
Exactly. And then you combine that with Yang's experience in tech and venture capital, and they were able to build out this highly regulated infrastructure.
Which brings us to the most important part of the report. The technology isn't even their main moat.
No, it's really not. Their true competitive advantage is actually their licenses. They are incredibly strict and hard to get.
Like the digital payment token license from the Monetary Authority of Singapore.
Yes, exactly. They were the first firm to get that one. Plus, they have secured licenses in Hong Kong and the UAE.
And this ties into their third pillar, right? FOMO Treasury.
Spot on. That's their Web3 arm. It acts as a regulated bridge for fiat to cryptocurrency conversions and stablecoin settlements.
Oh, right, like Ripple USD.
Exactly, tying tokens directly to the US dollar to prevent massive price swings during transfers. And because they have these strict licenses, it builds a massive amount of trust.
Because legacy banks are terrified of anti-money laundering fines.
Oh, absolutely terrified. Legacy banks like JP Morgan Payments and BNY, they won't touch you unless the compliance work is airtight.
So FOMO Pay does all that regulatory heavy lifting for them.
Right. And in return, they get to plug directly into that Tier 1 banking infrastructure.
That is brilliant. So the key takeaway here from the Private IQ report is that FOMO Pay is succeeding because they position themselves right at this lucrative intersection.
Yeah, the intersection of B2B corporate treasury and regulated digital asset infrastructure, specifically across emerging markets.
So instead of fighting over retail pennies, they build a regulated high-speed bridge, which leaves you with this provocative thought to mull over. If a single licensed platform can now seamlessly settle traditional fiat and Web3 stablecoins 24 hours a day, 7 days a week, what does that actually mean for the future of traditional banking hours?
Yeah, or sovereign currency borders altogether for global businesses.
Exactly. Something to definitely think about.